What's up, you guys? It's Henry. It's my birthday today. I'm 26, and I hope you're doing well. We have 2 months left in the year, and holiday season's almost here now. I want to let my YouTube family know that I launched Weekly Options Income Academy today. This program is what I wish I had when I started investing and trading. It takes a beginner with little to no experience into an income generator and intermediate options seller. And best of all, I cover technical analysis and the simple rules that I make that grow small accounts into bigger ones. And I cover charting, analysis, stock picking, option selling, calls, puts, every single thing I use, especially my secret formula that I've used for a very long time now. It's called The Wheel. This course will show you exactly step by step how to pick stocks and options, and a strategy that I learned that I made so much money on while I was working at a Wall Street hedge fund. I make it simple and easy to understand because I've tested this program on so many students, and I help people understand even if you don't have a large trading account to start with. If you join the first day, I'll also do a personal portfolio critique just for you. The program is 8 modules, over 50 recorded videos that are yours to keep forever, and you can go at your own pace. There's also weekly coaching calls for a month and much more in the program. You can check out more details in the link below, or you can visit investwithhenry.com. I'll be closing the program in 7 days to put some final touches on the program, and after it's complete, I'll be removing Module 8 from the offer, and that is my small account secrets program. So you're going to want to take advantage in the next 7 days because I have a ton of value for you guys there. You guys are so lucky because I really wish I had a program to teach me how to protect my stocks, create a margin of safety, and generate consistent weekly income. I spent $300,000 on a degree, and I still had to learn the hard way. But you literally have a shortcut. And although I got a Drexel degree, I didn't actually have a shortcut. I had to make a lot of mistakes myself, losing tens of thousands of dollars. But I finally made multiple 6 figures trading options, and I want to teach you guys how to do the same. Stocks can help you retire, but options can make you a fortune. Check it out. All right, back to the video. Jack Ma's financial services company Ant Group took in more than $3 trillion in orders from individual investors across its dual listings in Hong Kong and Shanghai. Ant Group's historic $35 billion initial public offering is garnering so much attention and so much hype from retail investors. I'll be discussing what you guys have to know about this massive company hitting public markets, so let's take a good look at it right now. Ant Group, the Alibaba-backed fintech company that owns the digital payment platform Alipay, will soon go public in one of the biggest IPOs in history. Ant was valued at $150 billion after its last funding round in 2018, and it could hit a valuation of $200 billion in its public debut. If you don't know Alibaba stock, well, what's wrong with you? They have a market cap of almost $1 trillion, and they're the Amazon of China. I'll get into a lot more detail about Alibaba very soon in this video. What I first want to do is review Ant Financial's business first, their financials, and then I'm going to compare the IPO to Alibaba and what you can expect from Alibaba stock because, well, spoiler alert, they actually own part of Ant Financial. So guys, let's get stupid rich, and if you're pumped, all you have to do is smash the like button. It's free, it's awesome, and Uncle Henry appreciates it. Ant Group is a branch of Jack Ma's Alibaba empire. Ant's revenues rose 38% year over year to 72.5 billion yuan, which is $10.7 billion in the first half of 2020. Within that total, its digital finance service revenues rose 56% to 46 billion yuan, or $6.8 billion. Its net profits grew 21% year over year to $3.2 billion. Alipay serves 711 million monthly active users at the end of June, and the app processed 118 trillion yuan, or 17.4 trillion in payments over the past 12 months. Its main rival, Tencent's Tenpay, which includes WeChat Pay and QQ Wallet, served an estimated 940 million monthly active users last year. Ant is a tremendous play on China's growing fintech market, which, believe it or not, is way more advanced than the US market. Everyone pays through their phones in China. The only not so good news is Ant will only go public in Hong Kong and Shanghai due to the US-China trade war and recent threats to delist US listed Chinese stocks. And that's not honey. I don't know why I got this honey, but I felt like trying it, and Manuka honey is pretty good. But what I really want to say is basically that's not so sweet. We have a problem here because we need to figure out how we can make money without directly investing in, Ant Financial. And luckily, I've got a few ideas for you guys. So besides getting a Chinese VPN, you can't directly invest into the IPO. However, there's still a few ideas that I just mentioned that I have in mind. And the first idea is, well, can you guess it? Since Alibaba, as I said in the spoiler alert, owns so much of Ant Financial, number one way to get into Ant Financial and have exposure with your money in your portfolio is to invest in Alibaba itself. A simpler way to invest in Ant is to just buy shares of Alibaba. I think that's a smart move because, well, you want to be diversified if you're an American. You don't want to have your job, your retirement, your assets 100% in America or whatever country that you're in. You don't want to have all of your assets, your income, and your livelihood depend just from one income source or just one country. So, should there be any weakness or shift in the economy, well, you're not going to be in such a good position. So, you need to cover your income on multiple bases. Alibaba allows you to do just that. They previously held an agreement with Ant, which entitled it to 37.5% of its FinTech affiliated pre-tax profits. But last September, Alibaba traded those rights for a 33% stake in Ant Financial. So you get two beasts. Well, actually count Uncle Henry in, so you get three beasts under one umbrella, and that's a fantastic opportunity. Alibaba's equity stake in Ant generated $752 million in investment profits, or about 4% of its net income in the fiscal quarter of 2020. Alibaba's equity stake in Ant generated $752 million in investment profits, or about 4% of its net income in fiscal 2020. And guys, by the way, I'd focus on the 3/4 of a billion part because the 4% is a small amount due to Alibaba's overall market size. They're just so big. That's why the 4% seems small. But the raw $752 billion definitely does move the needle for Alibaba. So basically, the owner Jack Ma is the definition of stupid rich. He's not Elon Musk, but his pockets are pretty close. According to Google, Jack Ma has about $65 billion net worth, while Elon has an $86 billion net worth. It's unclear if Alibaba will sell any shares of Ant after its IPO, but it will still remain likely to be a top shareholder. And either way, whether they keep Ant Financial or they sell Ant Financial, they will still benefit greatly. Next, we can wait for an ADR. You can think of an ADR like an actual stock on an American exchange, except, well, it's just translated to the American market from the Chinese market. It stands for American Depository Receipt, and it's a certificate issued by a US bank that represents shares in a foreign stock. It doesn't have to be China. ADRs trade on American stock exchanges. By the way, NIO is an ADR, so if Ant Financial becomes an ADR, you can feel more comfortable that our savior and our amazing company NIO is also an ADR, as are many other stocks. Ant will require some time before they can be an ADR, and it depends a lot on the SEC. Depending if they're a level 1, level 2, or level 3 ADR, it's basically how long it's going to take them to be listed as an ADR. These levels just represent the level of risk the SEC places on the company that they're going to try. And by the way, the SEC stands for Securities and Exchange Commission, and you can think of them as the police of the stock market, and you do not want to mess with the police, and you definitely don't want to mess with the SEC. Here's what you could expect if you mess with the SEC from one of my favorite shows, Billions.
You came at me!
Because you're a criminal, Bob. And it's my job to shut him down and put him in jail.
Well, if that's true, you're not very good at it.
Luckily, the SEC mostly goes for hedge funds and big name investors, so don't get all worried on me. Cool? Cool. The next thing is, I get this question a lot. What is the best broker? That's one of the few questions that I have no idea what the answer is to that, since I mainly use TD Ameritrade, Robinhood, and Webull. However, doing some research, Interactive Brokers, Fidelity, and Charles Schwab allows US investors to buy shares in Hong Kong and in Shanghai. There may be restrictions though, depending on which country you're in. So overall, I'd say your best bet to make money is investing in Alibaba, which I like as a company anyways. Over the past 6 months, the stock rocketed up 72%. In fact, it beats Amazon in performance during the same period. Here's a chart showing the comparison between those two stocks. All right, and we're back. So I had to change my shirt because I totally stopped recording. So we're back in action though. Alibaba controls 2/3 of Chinese e-commerce market. What's more is China's middle class is expected to hit 550 million by 2022. Think about it, guys. That's about 40% more people than the United States has, and currently Amazon has a market cap of 1.5 trillion, while Alibaba has a market cap of 824 billion. Alibaba, like Amazon, has a digital media unit and an ever-expanding cloud computing segment. The company's cloud unit surged 59% last quarter to account for nearly 10% of total sales, with its media space up 9%. So as you can see, you can't really go wrong with owning Alibaba in my opinion. It's a top stock on my personal watch list. That being said, thanks for watching. I'll be releasing more detailed videos on discounted cash flow because I know you guys really like that. That's gonna come very soon. Neo videos and a lot more options content. So make sure you subscribe because I'm making my YouTube family stupid rich. You know what you have to do for me, right? Be aggressive in learning, but be safe in investing. I'll see you guys back here soon.
No one ever sees me, I'm losing every battle. No one ever sees me,